Shares have been shaken and the dollar's dived as political paralysis grips a poverty-stricken Greece. The Australian dollar falling below parity against the greenback to a 6-month low. That might help some parts of the economy, but both the Reserve Bank and businesses in the firing line still see a tough period of adjustment ahead. Neil Woolrich has our story.
It hasn't been much fun for Australian exporters over the past few years.
We've had to cut back everywhere just to survive. We've seen our overall volumes drop 35 to 40% over the last 4 years.
Ronstan is one of the world's biggest manufacturers of yacht fittings, but since the global financial crisis, it's hit the perfect storm of a high Australian dollar and a downturn in boat building.
Particularly with the problems that Europe's experiencing, it's failing to recover because Europe's where most of the world's boats are built.
But there is some sign of relief, at least as far as the currency is concerned. The Australian dollar has fallen 7.5% against the greenback since March, dipping below parity for the first time since December.
The dollar appreciated to $1.10 at its height, so it's come back down to $1 or $1.01. Fantastic. I mean, it's a little bit of good news, but we need a much greater shift than that to be competitive again, quite frankly.
Still, the Reserve Bank is expecting the elevated currency will persist, forcing difficult structural change on the domestic economy.
And the key to making manufacturing, I think higher education, parts of tourism competitive is for human capital accumulation. And that allows us to have high value added in a whole range of industries.
The dollar's dive was triggered by a collapse in Greece's political unity talks over the weekend, raising the odds of both fresh elections and Greece's exit from the Eurozone.
Whatever government is formed either now or after the elections, in our opinion, after elections, will not cancel the bailout agreement or the austerity measures.
The Europeans used to talk about growth-friendly fiscal consolidation, and I think they were hoping that the fiscal consolidation would lead to an improvement in confidence and the private sector would spontaneously come and spend. Well, that never seemed particularly realistic.
Despite the renewed concerns over Greece, Asian markets, including Australia, were a fraction stronger, although that had more to do with China easing the lending restrictions on its banks. Philip Lowe says the focus in Europe is now on stimulating the supply side of the economy to improve growth.
It may be that they can do enough with the help of the international community to give confidence to people that the supply side issues can be addressed. I think if that were to take place, the situation could look quite a lot better again quite quickly, but it is a big if.
I think the situation in Europe is more of a magnification of the other issues that exist in the world at the moment. For Australia, we see China is starting to slow, and that can create some concerns here. And in the US, the recovery, which has been very, very strong, has started to taper off a little bit.
Mark Golopoulos says resource stocks have also been buffeted by the high Australian dollar recently, so the cheaper currency is making them more attractive.
There's been a very interesting short-term correlation that we've seen over the last 6 to 12 months where, as the Australian dollar falls, we tend to see some offshore buying come into the market, and I expect that to continue. So that does put a bit of a floor under our market, and I think that as soon as we get a bit of stability overseas, we'll get more and more these funds coming in.
But that too depends on nervous investors abroad having the confidence to invest. Yet another very big if.